Hi, everyone, and welcome to this edition of the Insurance Experts. I'm so excited to have on the line Cassandra Watson, a long-term care insurance specialist. Cassandra, why don't you tell us a little bit about yourself?
I'm a long-term care specialist. So all I do all day, every day is long-term care planning. I've actually been doing it for about 5 years, just over 5 years. It's kind of a fun story. It's a little bit of a family thing for me. My mom is also a long-term care specialist. So I kind of had the opportunity to learn and take it all in before I actually started myself.
So how many clients do you think you've helped over the last 5+ years?
I've definitely met with well over 1,000, possibly thousands. I know that I've helped about 1,000 people, just over 1,000 people, go through the underwriting process, and then a good percentage of those are insured with the company and plan that they thought was appropriate.
So how do you come across all these people, and where do you find all the time to do this?
The internet.
Okay.
So I'm actually licensed in all 50 states. So when people go online looking for long-term care, a lot of times they'll find me. And so I can also talk to people from all over. So it's great.
That's so cool. LTC is, oftentimes considered, one of the older insurance lines of business, but it's really modern how you're approaching this and helping people.
Totally. It's 100% virtual. It's just kind of for the new consumer. So it's good.
So I know you wanted to share with us the client story that recently happened. Why don't you tell us a little bit about the clients you helped?
Yeah, so I just wanted to share a little bit about Bob and Janet. They're a couple from Iowa who I talked to a couple weeks ago now. Bob is 56, Janet is 55. It's kind of an interesting case because Janet actually got long-term care through her employer in the early 2000s, like 2001, 2003, somewhere around there. At the time, they were in their 40s. I mean, Bob was not interested. He just didn't really want to have too much to do with it. But Janet had the option to, as she put it, to cover her kids if anything were to happen. So she took it. Fast forward, they actually were meeting with an attorney to do like estate planning and will, set up their trust, that kind of thing. And the attorney recommended, not knowing that she had a plan, they recommended that they look into it. And so they went on the internet.
Interesting. And so what encouraged Bob to do it this time around?
So their kids are both grown now. They have two kids. They have one grandchild with one on the way. And they're also, so I said 56 and 55, they're both looking to retire within the next 2 to 3 years. She's a programmer, he's in construction. So they're kind of at that phase of life where they're, ready for the next thing.
Interesting. And have they saved up enough money for retirement? What does that retirement plan look like right now?
Yeah, so the retirement plan actually looks pretty good. They're expecting to have, just from a numbers perspective, around 72,000 a year, not including Social Security. And then they've also got around $2 million in rental properties that they plan to keep and continue to use and rent out for income in retirement.
Okay, so like 72,000 of income. How is the long-term care insurance going to fit in to help solve the problem that they face in terms of a risk for long-term care?
Yeah, so definitely with the income from the rental properties, that's great. That's going to help them just kind of fund their normal retirement living and life that they want to have. The issue, and what's kind of a double-edged sword with real estate, is that if you need long-term care and you need more than the planned income that you have, your only option is to then go start selling some of that property, to sell off some of those rentals that you have. And the issue there is there's a lot of time and effort and headache and stuff that goes with that. Not to mention that's then eating away at the income that you need the following year. So long-term care for them, it's not that they need to fund all of it. They just need to help alleviate some of that cash flow risk.
I see. And what type of plan or solution did you recommend for them to alleviate that risk?
So I recommended a traditional long-term care plan for them. There are lots of different solutions, different ways you could approach it that are out there today. But I felt that they didn't really need massive coverage. I mean, they're like the nicest people. They wanted to care for one another at home. They were worried, what if one of them needed assisted living and the other was still living at home? So I really felt like kind of a really practical, smaller traditional policy would do for them what they wanted it to do. And so I recommended a traditional plan.
So did you get it just for Bob? You'd mentioned that Janet had something through her employer, but did you get them both plans, or how did that work?
Yeah, yes. So I actually, in the process of going through all of this, I looked at Janet's coverage because I was like, it's been a while. If it was through the employer, maybe she's not, wants to just review it. So we went over all of it. She actually did have really good coverage with one exception. She didn't have any inflation protection. So at 55 for her, I felt that was really, really important was for her to have some inflation protection. So we did a super, super baby tiny policy for Janet. And then we did kind of a still on the smaller side, but a little bit bulkier plan for Bob.
Okay. So give us an idea. How much did they pay in total per month for this long-term care insurance plan?
So per month, they're only paying like 130 per month, um, like about $250,000 in coverage for when they need it.
Interesting. Is that something that you see very typically, plans in that range, or are you typically seeing people buying more coverage than that?
So just on the scheme of things, I would say the premium was on the lower side. It really, remember, they've got that other premium for Janet, so we wanted to make sure that whatever they were paying total was still affordable. So I would say for people getting two plans from the ground up, it was on the lower side of average, but they didn't need more than that.
Interesting. So I guess you can say long-term care insurance can be very affordable. I mean, it looks like, $130 a month for both of them combined, right? Wow.
Yeah,
That's quite, I think a lot lower than what most people expect.
I think so.
Yeah.
And they
Well,
both have inflation protection. They're good to go.
interesting. Well, that's a really interesting story. I mean, it represents kind of middle America in a way, but I don't think a lot of people are getting these types of solutions. So I think it's great that you're offering it and doing it on the internet. That's really exciting.
Thanks. I'm glad to be here. Thanks for having me.
Yeah, yeah. Thanks for being here, and we'll talk about some more different kinds of solutions with you in future episodes. So
Sounds
appreciate your
good.
time.
Likewise, Mark. Thanks.